bearish engulfing pattern. And why do you think I put a rectangle around those three candle lines? What happened with that black real body? How many white real bodies? Or it could have been a doji. Did that wrap around? 2. Right. Doesn't mean the market's going to fall out of bed here. The euro is going to fall out of bed here. It's just dramatically increased the likelihood of a turn. One of the trading principles we'll be looking at later, one of my Nissen trading principles, is candles don't give price targets. People don't realize that. Candles do not give price targets. You're going to have a separate slide on this. But the reason I wanted to mention that is when I talk about something like the black real body engulfing 2 white real bodies, don't think in the back of your mind that this is going to happen. Think in the back of your mind that the probability of the market turning has increased, more so than it would have been a black real body wrapping around 1 white real body. And it should be a strong resistance area also. Okay, here we have a bearish engulfing pattern, a little bit of an uptrend. Okay, now I'm going to put a circle here with a question mark. Now, that's a black candle wrapping around the white candle. Remembering one of the Nissen trading principles that we talked about before about trend, is that a bearish engulfing pattern? Okay, the shape is right, but think about the preceding trend. A bearish engulfing pattern should come after what? An uptrend, even a short-term uptrend. So this is not a bearish engulfing pattern. Let those who misuse the candles go short on that. So whenever you're defining a candlestick signal, look at the shape and the trend. Yes?
No question, why is that not a trend from the spinning top to the next?
Over here? Well, I'm just viewing over here. This is too short. I'll look at 3 or 4 or 5 candles, not 1 or 2. So to me, the immediately preceding trend is this, which is down. Okay, here, important highs for those who are following the euros. A bearish engulfing pattern, which became resistance with another bearish engulfing pattern. Does this mean the euro is going to collapse like that, or the degree, the probability the market's going to turn much higher? It was the latter. Yes? Yeah, the pattern is something called the last engulfing, and I talk about that in my advanced DVD, but I'll mention it very briefly now. Essentially, a last engulfing would be the market's moving up, and it's not so much a candlestick signal to use, but just warning you about using it incorrectly. The market's moving up, and now and then you have this. Okay. Now it's white wrapping around the black. What is that? If the trend is right, a bullish engulfing pattern. What's wrong with this? The trend is not correct. The Japanese call this a last engulfing pattern because it's supposed to be bearish. I don't view it that way. I just view it as it's not really that bullish. What the Japanese will say is that the reason they call it a last engulfing pattern is because you fall in love with the market and you both perish together. They call it double lover suicide. And the point is that it could be like a buying climax. So if you have very high volume in non-Forex and you get something like this, and then you have confirmation by a lower close the next day, the Japanese view that as bearish. I don't talk much about that except in my advanced material. The main thing is that just know that's not a bullish engulfing pattern. But that's what the Japanese call last engulfing pattern. And the flip side is this. This is what they would also call this a last engulfing pattern because the trend is wrong. It's a bearish engulfing pattern. But the bearish engulfing pattern has to come after an uptrend. Okay, here we have a couple of engulfing patterns. And the reason I like this slide is, and I don't have to convince you of the many advantages that the candlesticks have over the bar charts, but this is just a very interesting aspect of it that a lot of people don't think about. The engulfing pattern, all we need is real body wrap around real body. That's actually a question I'm asked a lot. Does real body have to wrap around the shadows? And the answer is no. Engulfing pattern, real body, wrap around real body. So we all agree, I hope, a little bit of a downtrend that, that on your left, a little white wrapping around the black. And this is interesting. You could see how, this is why I give it a pip or two. You see how this opening here is actually maybe a pip or two below the prior close instead of exactly at it. So don't worry if it's a pip or two difference. Anyway, this is a bullish engulfing pattern. And during a move up, it's a bearish engulfing pattern here. Now, let me show you. In the West, we have something called an outside or a key reversal session. Okay. And what a key reversal, this is a bar chart here, bar chart lines I made here. The market makes a higher high. This is a negative outside or key reversal. The market makes a higher high and then closes under the prior close. Okay, it's an outside reversal with a bar chart. What that means, obviously, is that this has to have a higher high. Now, with this engulfing pattern, did this black candle make a higher high? No. So if this was a bar chart, would it have been an outside or key outside reversal? No. Wouldn't have been any turning signals. On the bullish engulfing pattern, exactly the same thing. A bullish key outside reversal means that this candle would have to make, this bar chart, if it was a bar chart, this bar line would have to make a lower low. Did that make a lower low? No. So it would not have been a reversal signal with the bar chart, but was it a reversal signal with the candlesticks? Yeah, white wrap around the black. The low of the bullish engulfing pattern should be support. The high of the bearish engulfing pattern should be a resistance area. Okay, one thing to look at, a little bit more advanced. Question?
On the last chart, would you, looking at this, would you set your resistance at the two prior dojis or at this new high?
Okay, great question. Would we set the resistance at these two prior doji or up here? Okay. Now, did these two prior doji hold as resistance based on a close? Yes. Okay. But once you got here, what you could do is then you'd have to move it up a little bit more, because then you'd have to close above here.
So you would raise it?
Yeah, I would have raised it, because the bearish engulfing pattern, exactly. What you might want to do is, let's say you're here, and you're getting a whole bunch, the doji, the bearish engulfing pattern, but why wouldn't you be selling short here? Okay, the trend I'd probably have to see, you know, I'd probably have to put a moving average on there, but somebody said support. You're right at first support. Short term, but isn't the market at a support area? Remember, we only have this much data now. Right? It's at a support area. Short term, not major, but nonetheless, this is a support area, and I'll show you this. Okay? And then if you're thinking for next day confirmation, is it still holding support? So the setup might be there. A lot of turning signals. But if you're selling on this bearish engulfing pattern, you're selling at a support level. I'd rather have the market break the support, even a couple of pips, or certainly here. I don't care if that's a spinning top or not. It broke the support area. This is still probably an okay risk reward. But we should always think about if the market's at support or resistance at the time we get the signal, because if it is, you don't do the trade. Yes?
Wouldn't you have a higher confidence of going short on the engulfing pattern if you've had another resistance 2 or 3 months prior back to that?
The question is, wouldn't we have more confidence if going back on the chart here, this was confirming a resistance area? And the answer is yes, definitely. But I would still like to see a break of that support area. Here are a couple of engulfing patterns. And one thing we should think about is comparing the size of the real bodies. Ideally, what we want to see is the second real body much bigger than the first real body, to see that the opposing forces are taking control. A bullish engulfing pattern, we want to see the bulls, the opposing forces, the bulls taking control from the bears, bearish engulfing pattern, the opposite. So in the green rectangle,